Once again, good afternoon, everyone. Thank you for giving me this opportunity to speak to everyone about this topic that I hold very dearly. And today, what I'll do is talk about response strategies and success factors, and share some of the journey that I've gone through. But before we start, maybe we should set the scene as just to remind everyone what's going on. But I won't spend too much time. I've given 30 minutes for this session because we want to leave a lot of time for the valued panelists from the other countries to share their actual experience. Whereas I'm still walking with all of you through this new journey. But let's set the scene. So audit exemptions technically are not new because they've been around, but just that the threshold is going to be increased significantly. So I'm sure you know, since 2017 Practice Directive 2017, there have been exemptions in place where the highest was only the threshold qualified companies where annual revenue was not exceeding 100,000 in the current financial and immediate past 2 financial years, assets of 300,000 or less, and then not more than 5 employees. So still relatively small. Even if you have one shop house as an investment holding company, you will need to audit. Now, and what SSM have found in the past experience was only 7% of eligible companies actually took up the exemption. So it wasn't really well taken up. And I guess there could be a lot of reasons for this. I mean, for us, a lot of times, the spending a time to explain to the clients all about the exemption, sometimes it might be easier to just audit, or some of the clients, they don't really know about it. Usually we will tell them sometimes, it's so small that it doesn't really matter for them. So it's not really well taken up, the last one. So, but the one coming up actually is going to impact a lot. And I think going forward, there will be a higher take-up rate of this. So I guess everyone is aware, ultimately, the threshold is going to be on the right-hand side, Practice Directive, according to Practice Directive 10/2024, we are looking at companies which fulfill at least 2 of the following criteria. Annual revenue for the current immediate past 2 financial years does not exceed 3 million, or total assets as reported in current statement of financial position and the immediate 2 years do not exceed 3 million, or the number of employees at the end of the current and immediate past 2 financial years does not exceed 30. So it's quite a big increase. And at the same time, they also introduced quantitative measures, which is similar to what Singapore, where audit exemption will not be applicable to any exempt private company. So in Malaysia, exempt private company, you're allowed to lodge a certificate, then you do not need to actually lodge your accounts. So these companies, if you want to remain confidential information, you still need to perform an audit. So this is something to take note of. Be a company that is a public company, including a listed company, will not be allowed audit exemption. I think that's pretty reasonable. And also a private company that's a subsidiary of a public company, regardless of your revenue or assets or number of employees, will need to be audited. And a foreign company. So actually, still a lot of companies will need to be audited, even though they might meet the criteria. Now, given this, we have seen statistics from SSM. They have estimated based on their information, but not really considering the number of employees. They have estimated that before that, SSM has taken in the consultation. They've taken in based on the consultation, the opinions of different stakeholders. And I think what they've done is they were wise. They have decided to implement it progressively. So we are not jumping immediately from 300,000 to 3 million. In fact, it's going to come into place over 3 years. So the upcoming one that will be commencing on or after 1st January to 31st December, where the threshold for turnover will only be 1 million, assets 1 million, number of employees 10. And SSM estimates the number of companies eligible will be 42% of all companies. Whereas phase 2, you'll be raised to 2 million and for turnover and assets, and the estimated percentage of companies eligible will be 48%. This is all taken from SSM's circular, public circular. And the phase 3, which will be the target 3 million, which will commence for financial statement submission year beginning from 1st January 2028 onwards, will be 3 million for turnover, 3 million for assets, and 30 employees, which is expected to affect 51% of companies. This is not taking account of number of employees, as I said, so the percentage could be lower. And yes, while this audit exemption, I'll be sharing some response strategies. I think many SMPs are worried because from some of the companies actually, some of the SMPs actually could be quite significantly affected by this, because as you see, 51% of companies suddenly are eligible for audit exemption. So SSM now has active companies 691,960. Now, according to their circular, this is still, as audit exemptions are really needed, because although Malaysia has tried to increase the number of audit firms, it's still quite small compared to the number of active companies registered, putting a lot of strain on the industry, who is complaining of ever shortage of accounting resources. And also audit exemptions would lower the cost of doing business. So yeah, as I mentioned just now, this would save money potentially for up to 51% of active companies, and though this does not take account the number of employees. Right, I'm zooming through this because that's not the main objective of today's. It's really just to set the stage. So just to warm everyone up, so that we make sure that you can enter the pigeonhole. Please do enter the pigeonhole now to poll. I know this is not going to be representative, because today's the people joining most likely will be partners in SMPs, and maybe those especially going to be more affected. So I think it will skew more to a higher percentage. But let's see. Please do vote. And if you are not so senior, not just maybe guesstimate for your firm, what is the percentage of fees that is expected to be affected by audit exemptions under the new 2 out of 3 thresholds. All right, I'll give you some time. Now, while you're doing it, I think maybe some of you on your mind might think that why is someone from Grand Thornton telling me about this? And indeed, for me, it will be below 15%. And you might say that, of course, I'm going to tell you about audit fees, I'm going to tell you that audit exemptions is not as worrying as it should be. There should be share strategy, get out of it, because we deal with bigger companies. And yes, that's true. But as Nadia has introduced me earlier, actually I've gone through many phases of my career running a firm. I started out my career in a Big Four, and in London, of course, we are not affected. But when I came back to take over my dad's firm, at that time, we only had about 15 audit staff. That was in 2009. And we were very small, okay? We were very small. And during that time, if we were being polled, then it would be more than 80%. And by 2014, when the CSAP recommendations came out, I don't know whether a lot of you are aware of the CSAP recommendations. The World Bank actually gave some recommendations about our state of accounting profession. And one of that was actually to implement audit exemptions. And there was a report called CSAP. You can search for it, CSAP. And SSM responded to that. That I knew, and at that time, the industry already knew that it was only a matter of time audit exemptions would come in, given what the global trend would be. And I've been preparing for audit exemptions for more than 10 years. And that's the reason why I was growing the firm to the extent where by 2018, when I merged with Grand Thornton, I had about 65 staff, of which about 30 audit staff. And at that time, our client portfolio would be less affected by audit thresholds, and sealing the merger with Grand Thornton. Now, actually, we are not so affected by it. So what I want to encourage everyone is actually, there's time to prepare for this. And really, I think having this, as Puan Saniza has said, a lot of wise words, a lot of the key points I want to talk about today, as already mentioned in the speech. It's really a time to really think and to be a catalyst to transform your firm and to look outside the traditional comprehensive suite of audit tax, and a very vanilla type of audit and tax service compliance services. So I hope today my sharing will help you to set off in this journey. Are we going to show the poll results now, or should I move on? We can show the poll results now, or okay, or shall I move on? I'm not getting a response, so maybe I'll move on. Okay. So I know for SMPs it's not easy time right now, and so it's been a very brutal year. SMPs are really being crushed by a lot of pressures these days. And audit exemptions, I put it right at the top because that's the topic of the day. But especially those from Johor, we are facing the talents crunch and rising salaries. Post-COVID, we had to increase our salaries by 30% to stop Singapore accounting firms from poaching our staff. And I think, this has been a general trend and pressure across the industry because my colleagues in KL or even Penang have been affected by this. And of course, accountants, we complain about bogus accountants, and there's e-invoicing, there's ISQM1, practice reviews. This year we have SST coming in, stamp duty. It's like these days, the speed of the developments have made it so hard that it's pretty overwhelming, and especially for single partner accounting firms, which once upon I was, I really can empathize where it's so hard to keep up these days to advise our clients, and this year we had MBRS as well coming in, and very soon IFRS for SMEs, which is going to feed into our AMPers, it's going to come in. The speed of developments have made it very hard, especially when it's so hard to hire staff and and manage the Gen Z of these days. It's so different from before. So it's really tough, and it might seem that the authorities are not helping by bringing in this audit exemption at this very tough time. But it's not easy for our clients too. It's they themselves, other than what we face, they of invoicing, MBRS, transfer pricing become compliance, SST, and they can't hire accountants as well because there's a shortage of accountants. It's so hard for them to manage their accountants. In fact, I had some finance managers telling me from Johor that they want to quit to go to Singapore, not because that they want higher pay. They wanted to stay around for family reasons, but they just can't keep up with dealing with all these new updates. It's so hard for them to be a finance manager and still have to worry about, these days even stamp duty, and so it's tough. And then of course the finance managers still have to deal with the business issues. They too have rising costs. Yeah. We have audit exemptions coming in, but suddenly they have to pay for MBRS 2.0. Suddenly they will have to pay more for stamp duty. They have to pay 2% for their foreign labor. It's tough for them, and the market is pretty weak. I mean, other than Johor, certain industries are doing very well, but thanks to Singapore, yeah. But globally, the market is weak, and we also face competition from China, who is very hungry for business these days. So audit exemptions is part of this to help to alleviate, but actually it's not really that much in the grand scheme of things. And I know a lot of people mentioned that, we save costs and audit fees are, always a very small aspect for it, but every little helps, and they're really overwhelmed right now, and they really need help. So we're in a situation where there's a lot of difficulties for accountants in the whole industry, and I'm bringing out a Chinese word, okay, and this is not original. Many people talk about this. The Chinese word for danger, it's Weiji actually is made out of two words. One is danger and one is actually opportunity. So in every risks, in every problem situation, there is an opportunity. And I hope, framing our minds into solving problems would help us look into the opportunities that are going to come. So with this, we'll move into opportunities and strategies. And with this, we move to the second poll question of the day. So let's see how everyone is doing. What best describes your firm's current response to recent regulatory changes to audit exemptions? Yeah, whether you have a formal strategy in place, whether it's still discussing options right now, because I'm just trying to survive my peak period, and that's very common. That's very common this year. We're just trying to survive our peak period. Many audit firms are struggling because they still need to audit everything this year. Then next year, the compliance the audit exemption to come in. And this year, I still need staff for MBRS 2.0. But I don't dare to hire more because I don't know how the audit exemption is going to affect when it's going to hit so much percentage of my fees. So, how have you started planning for this? Or you're just aware of this and you haven't started planning, but you think it's a future problem, you solve it as it comes along. And there's no right answer to this, and it really depends on the type of firm. Maybe you should have another one. It doesn't affect us, so we don't care, But yeah, please do answer on the poll questions. Okay, in the interest of time, I'll move on first. All right. So I think what's going to happen about I think what needs to happen about audits is actually from going forward, we need to move from compliance audits to value assurance. But honestly, 3 million in the grand scheme of things, Singapore would laugh at this amount, 3 million, they're at 10 million already. But I think, it's a start to make us think about moving from compliance audits to value assurance. And what's the difference? Compliance audits is you're forced to audit by legislation. Someone told me it's like a parking fine. Yeah. Moving to audit insurance engaged because it's needed. A lot of the audits are not actually needed. And I think as auditors, SMPs, deep in the heart, that's the case. It's they are, and we frame it differently. We say they are low risk. But actually, they're not needed because a lot of them are mom and pop shops. They are owned by family or sole proprietor, sole owner, and he's not going to cheat himself. So when we're auditing, our audit opinion says it's for the members of the company. There's a key stakeholder. Actually, it's his company. So yeah, mind you're focusing more on tax and all that, and that's why there's an expectation gap, and it results in this situation where then the audit fees become very low because actually it's not very very much needed, and that's what we're facing right now in the whole market is the audit fees in Malaysia. I think if you really examine yourself and look at currently the ISQM1 and QSQM2 requirements and ISA requirements that how complex they are, it doesn't, our audit fees in Malaysia doesn't really support doing a full-fledged ISA audit. It's really not sustainable, and that's the case because it reflects the situation where it's not really needed right now, right? And so I think we need to move away and start to explain to the clients why they need audit assurance, and it's very much needed in the industry. And if you have trouble explaining, I suggest you look at one of the MAI's publication that's been revised 2025, why audit matters to SMEs, and that will help you to come out with some of the reasons to explain to your clients. Yeah, so maybe some unpopular opinions that I have and I hold to, but this is my personal opinion. Really audit exemptions are not the end of audit firms. In fact, I would say that this is a bit of a hyperbole. It's a bit of exaggerations, but I feel audit exemptions will save audits because it will start to make us think about, and focus towards, what's the value of audit and deliver the value. Because if you don't deliver the value, what clients going to associate with audit is that it's pointless. Auditors don't know anything. It's about, hiding from them, or it's about them helping me to plan for tax. If that's the conversation we always have with clients when we're doing audits, that audits help you to, manage your tax, or is help you to meet certain compliance, or help you to achieve certain goals you have. That's really, I think, underselling what audit is, because audit is about having independent party, commenting on the true and fairness of accounts, or that is not materially wrong, so it's materially correct, so really we need to have more conversations about this to increase the value of audits and auditors. So in starting out with planning for audit exemptions, I think the first thing you need to do when you start planning is, of course, not panic, but really, taking our own advice is to really plan according to your situation. Do you know how much it impacts your clientele? How many meet up 2 out of the 3 of thresholds? Have you looked into that? And of course, one thing I forgot to mention when we set the stage is actually, even if they're exempted from audit, if a shareholder with more than 5% or shareholders more than 5%, if they request for an audit at least 1 month before the end of the year, it still needs to be audited. So, understanding the financial structures of your clients, and their stakeholders, do they need audits, and what's their future trajectory, what's their future plans, they might be below the threshold now, but maybe next year they will be, or they might be working, they're very small now, but they're planning for in the future to go for M&A, IPOs, getting bank loans. So it's really assessing all this and understanding your clientele, and this comes with conversations. So the second thing is you need to engage the client. So maybe when you're step 1, you can only assess the thresholds. Maybe at this point, you don't really, for this size of companies, 1 million, 2 million, 3 million, you don't really understand them enough. Maybe you need to start to proactively engage your clients. I don't know what's your view. We had that poll earlier. I've spoken to many. Some of them say they'll engage. Some of them, you just say wait for them. If they don't ask them, we continue auditing. But I think, do consider to engage them earlier and talking to them, and maybe taking the chance to understand about their future trajectory and plans. So we really need to move away the mindset. In the past, because we had it easy. And when I set the stage just now, SMB had it hard, but actually we have business because the government legislation, the country's legislation requires audit. But actually, many businesses are not like that. If you don't have business today, that's the end of your business. So we have been protected in that sense for a while, and maybe that has dulled our senses to our clients, because we expect that companies come to us, we just deliver the standard audit, the standard tax compliance. But have we really sat down to talk to our clients about their future plans and what are their goals, and match our service to their needs? And maybe there's an opportunity to do it now as you assess your impact, because just looking at thresholds is not enough. And just assuming that they don't need an audit is not enough, or assuming they need audit is enough. Maybe it's a good time to talk to them, as the number of clients will drop because of the audit exemptions. It's time to increase your fees and bring greater value to the clients. Yeah, and explaining, and also when they don't want to do audit, you can also explain to them the pros of an audit. In the future, you need to get a bank loan, you need to go for potential investors, they want to become bigger. Most companies, bosses, they want to become bigger these days, they want to be successful. And you have to explain to them, what's the consequence of stopping the audits, and one of them including the cost of resuming audit, because when they resume audit, you're going to charge higher. And that's one thing you need to take note, that a lot of audit firms these days, from the practice review, we find they're not doing open balance audits. But you need to do this. You need to tell the clients that when they resume, our audit fee is going to be higher than if they stop, and because opening balance audits, maybe they have not kept their stock lists or their PPE register, and then for us to go back and review everything is going to be messy. It's better to keep that discipline with us if they want to grow to become a bigger business in the future. So really having this client engagement is something I think is quite valuable. So all this step 1, all the things that consider, SMP, some of them, they're not very sophisticated. If you don't want to spend a lot of time, one of the ways to cut down your time is set up a client decision framework. Write an article for them and tell them all this, and that's easy for them to understand. Do a checklist for them to take, so they come back, you can understand it, and go down and sit down with them and understand them. And through this, understanding more about them, I'm sure that when you bring more value, you can get more fees. Another thing is, don't give up on audit, because now we are very used to our standard audit, but really there are so many types of audits out there. And sometimes, just very frankly, I get jobs because there are a lot of other firms who don't know there are all these different types of assurance out there to meet different needs. And just the ISA audit, standards or international standard auditing itself, there are many types. You have your standard audit, but there's also audits for special frameworks on summary financial statements, And all this, you can tailor to different requirements rather than just asking for a standard audit that could have different fees and solve different or meet different requirements. Or maybe they just need a review under ISRE. So here I put ISRE 2400, but there's also one review or interim results. And maybe they just need analytical review inquiries based on your expertise to go and look at key areas to look at and getting limited assurance. Or these days we have ESG as well. There's also non-financial assurance under ISSA, ISA 3410, the greenhouse gas statements. And this is a rising area that you might think is beyond your expertise, but some of the clientele, you might get an opportunity, you might go into this opportunity where you might be able to deliver value as well. And of course, don't forget agreed upon procedures. MIDA these days need a lot of these to understand all this, because a lot of this, if you know, you can expand the areas that are actually lower risks, but it's better to meet your clients' requests. Some of the clients, they're worried, they have business worries, they're worried about risk management, they're worrying about people cheating them. But actually, a lot of times using AUP could meet a lot of these requirements. And understand compilation service as well. You can't just compile without meeting the requirements. There's a standard on compilation as well that you need to meet. I'm running out of time, so I need to speed up. So, I mean, there are a lot of alternate services to move into. And these days, we can get more sophisticated using accounting outsourcing. A lot of SMEs cannot do yearly closing. They cannot do monthly closing. They do yearly closing. That is and completed many months after the year end. That is of no use to them. It's historical information that they don't use for their business. But coming in, you can do accounting outsourcing using cloud technology that you can help, or AI, to provide timely service. This is a big area that you can go into and deliver more value for you without the risk of a practice review. Yeah. And actually, this is, I have to say, this is really a perfect time to have audit exemptions coming in, because you have replacement revenue for MPRS 2.0. And this year it's so hard for SMPs because there's so many new transactional tax compliance. You have e-invoicing, you have sales tax, you have service tax, you have stamp duty. And as I said just now, a lot of finance, a lot of accountants, bosses, they're just getting lost and they really do not know how to go and address this. I mean, we are struggling ourselves. We have to do e-invoicing, and the sales tax and service tax acts are so difficult to understand, and the stamp duty now, is so complex, to understand the schedule one, which types of contracts are under stamp duty. And if we are struggling, what about our clients? So this is a great time to transition away from your annual compliance audits into a different service that is still recurring. Yeah, it's still recurring and still gives you your bread and butter, and not lose the revenue and still be able to keep the size of your team. But a mindset change and need change. You need to train different skill sets. And of course, I talk about ESG because the mandatory implementation upcoming for listed coals may ultimately flow to SME, especially like the climate change, where the greenhouse reporting, where they will need you, the suppliers and the customers to also comply as well and provide information. Our knowledge also helps with internal audit and controls design. I had a client come to me and told me, they went for a 10,000 ringgit course over 2 days, and it's so good that I never give them the advice, teach them how to the set controls for sales process, purchase process, how to write HR processes, write HR employment contracts, and also to how to hire people, how to set all these controls in place. And we all know this, but they're willing to pay 10,000 for today's course, yet they complain, for the same amount for audit fees. And all these are things that we can do. Of course, there's also business advisory and part-time CFO that you can do to help our clients. Yeah, so we come to poll question 3. I've really run out of time. I'm sorry about this. Just give me a few minutes more. So do poll about this, okay? And what your strategic focus to help you meet these audit exemptions. And all these I have I've experienced in my own trajectory. Okay, you can because of time, I will move on. So one thing I would like to almost coming to end, but I want to advise a lot of the partners who are really struggling right now to really stop thinking about our problems. Yeah, stop thinking about how we are being mistreated by the government, and and how they don't care about our business by taking it away, by now focusing on our client pain points, because that's where you're going to get your value. And we can segment this in different ways. So one of the ways to do it is to segment by industries, right? Which I don't put on the slides. If you segment your services for construction, traders, tradesmen, there's accounting firm in UK. They purposely target businesses that nobody want to touch, like plumbers, yeah, like plumbers, like those repair, because and they tailor their technology and services to that because they understand them. Yeah, coming to them is very seamless. So target by industry, understand their pain points, and coming up with easy to understand packages for them will help you. Another way is by business life cycle. When they start up, you can do business plan and budgeting, shareholder financing, tax efficiency, business coaching. When in growth, you can do business process outsourcing, internal controls, policies implementation, business advisory, IT implementation, pre-IPO advisory. And all these are skill sets we have. Business, and when they reach maturity, you can help them with due diligence of business acquisition, cost optimization, sustainability advisory, wealth management. And when they want to exit as well, you help them business disposal, legacy planning, closure of businesses. You help them to deal with all the aspects of closing a business. I could spend a lot of time talking about this, but really focusing on this and coming out with packages that suit them. All right. So I want to say you have a choice in the clients you serve. And I know a lot of you find it very hard, we don't have this now. So you need to be focused and target your niche and come up with standardized tools and quality controls for your target services so you can scale up in these services. And it's hard because in the past, your business has been built to scale up for audit. Now you need to come out and reframe, and so that your tools, your people are framed to solve a new problem. And in fact, when you don't do audit, you're free to do audits, because when you're doing audit, it actually blocks you from providing a lot of services that I put up here. Yeah. So one thing a lot of people I talk to say, why don't do something else? They say, hey, so easy to say, how do I get the team? So what I have done over the time is I have hired people from Big Four to build our team. My partner since 2014 was from EY, and she has transformed my tax team. Of course, sending people on training, obtaining certification. And then for SMPs, compared to the Big Four, you need to offer different services, where sometimes offering a holistic view to a client's problems, holistic solutions is important. So rotating across them before service lines helps with multidisciplinary skills and tying everything together. Like me, you can also join an alliance. I joined an alliance called GGI before, and that I get a lot of referrals, so that as I build up my capabilities, I have work. Okay, but those alliances are very loose, so you might not get a lot of strong capability building. So when I joined GT, they helped me with building up my TP practice and other capabilities, and gave me the work as well, because now of my network. So that's how we build up as well. You can have strategic alliances with specialists, especially in sustainability, and M&A, or expand your M&A to go into new service markets, or M&A to buy in specialized capabilities. Or you can, and one thing to support all of this, which is very important now, is strategic imperative, is to build up your technology capabilities, which include AI or other software or databases that can help you. Right, I'm running out of time, so just last thing here, I mean, you can get my slides, is really look at your execution roadmap. I would like to encourage us to move away from just complying, to tick the box, but really build domain expertise in the area you want to specialize in, so that you become valuable. As you build up, invest in your ISQM, invest in your template standardization, which I talked before, training, building up your knowledge I talked about, and strategic growth, having the proper leadership, and thinking about how to build up your knowledge, and also educating your clients is important. And with that, I end my last slide. And I'm sure a lot of the panelists today will build on what I said, that audit exemption may reduce a lot of mandatory work, but it amplifies the importance of us as trusted advisors. And that's where SMPs can truly thrive. And that's where we will do very well in an era where there's a shortage of accountants. We cannot go back to where it was, because there's no ample supply of accountants these days, for all sorts of reasons. And if we move into the right niche and offer the right value, That's where, we don't have to worry that each year our salaries are increasing, but our fees cannot increase. With that, I will end my presentation. Thank you very much.